Thank you for finding time to join us on today's episode of Tax Matters. My name is Olumuyiwa Matuloko. We are now effectively in the second half of the year 2016. Yes, we are in the month of July, and we thank God Almighty for that. Last episode on this program, we shifted our focus to value-added tax, VAT, which was introduced into the Nigerian tax system in the year 1993. We remember that our guests on the program labored to carve out a distinction between sales tax and value-added tax. And the consensus, the conclusion at the end was something like we have what we call homegrown value-added tax system. Before time caught up with us, our guest, the guide on the program, in the person of Mr. Ajayi Bamidele, Coordinating Director, Domestic Tax Group at the FRS, was telling us that under the VAT law, there are three broad categories of goods and services: vatable goods and services, zero-rated goods and services, and exempted goods and services. That is our take-up point today. At one forum, I remember hearing one of your colleagues saying that there are exempted goods and services, but there are no exempted businesses. How do you deal with companies that deal in exempted services or goods? Pardon the use of the words.
Goods and services are distinct from those who render the goods and services.
Good.
A company can be producing the same item that is consumed within the country and also produce items that are exported.
Good.
Some items are imported into the country that could be used for two different things. But if you just say, yes, these are exempted, in that case, you'll be given a blanket treatment for such an item. Usage is important. The product is also important. The company that is dealing or using are also important in determining which category, what type of treatment it should be given to.
If I run a pharmacy, how do you deal with me?
Now, there are so many products that are considered to be drugs, which are ornament for just beautification. Yeah. Pharmacists will say, oh, yes, it's a pharmacy, we are operating pharmaceutical drugs, and as such, my company should not be, my products are not vatable. Whereas the same product that is being used are being used by everybody for other functions. And they are no longer pharmaceutical, and that's where when they are being imported into the country in particular, how are those products codified when they are coming to the country? Are they treated as pharmaceutical products, or are they for a particular purpose which is different from the pharmaceutical use? If they are different from, if they can be used for dual purposes, then at the point of your rendering your VAT return as a pharmacist, you have to separate and tell how are these products used, how are they sold, to whom are they sold. On the basis of that, whether it's going to be exempted or not will be known.
Who collects VAT really?
Now, the VAT, the law says whoever is rendering the service is authorized to be an agent of collection for FIRS. As it is today, every company, every organization that collects VAT that is into business is expected to charge, collect, and remit VAT to FIRS.
So if I sell television sets, or I sell mattresses, or I sell desktop printers, I collect VAT from who?
Now, what is VAT in the real sense of it? VAT is a consumption tax.
Yeah.
who is consuming in this case? You that is selling is not, you are not the one that is consuming. It's me that is buying, that is consuming. I am the one to pay the VAT to you. And the law actually has prescribed that when you are in your invoice that you are raising, giving to me, evidencing or acknowledging payment, you need to actually include VAT in that invoice. And that is what is referred to VAT invoice. And spell and state clearly the value of the goods that you have sold, or goods or services you have sold, and the VAT you have charged. It's me that is consuming or buying that or using the service. The taxi driver who is to pay is the occupant, the person being transported, the passenger, because he's the one enjoying the service of the taxi driver, and is the one to pay the VAT, so that the VAT is now being remitted by the person who is providing the service or providing the goods.
Okay, so I have collected now. I sell mattresses, or I sell television sets, or I sell clothes. I have collected now. How do I send to the FRS? How do I file? How do I pay? How do I remit?
Now, the issue now is this. You that is now selling, at the point of buying, particularly the goods, you know, we talked about the service earlier on, that the service, when you render services, the input VAT there is not claimable. You only pay the output VAT as you collect them. In the sales of goods, at the point at which you are buying, you will have paid, because you are the one enjoying the service, you will have paid the VAT at that point. Whether you are importing it at the point of importation, at the custom clearing, you will have paid the VAT. Now, at the point where you are now selling, you are also to pay the output VAT. What you pay at the point of acquiring the asset to be sold or merchandise to be sold, you pay. What you paid was input VAT. At the time of selling, you charge, that is output VAT. Now, when you offset the one you pay at the point of buying from what you collect, is the net that you now pay over to the revenue as the output VAT.
Okay, let's be more practical. Mr. Bamidele comes to my shop to buy this printer. But this printer, I bought the 10 or 20 in my shop from an importer. I'm not the importer. The importer charges me VAT, doesn't he?
Yes, he will.
He probably also will have paid
his own VAT at the port.
Yes. Okay, so he has paid VAT at the port.
And
he's now selling 10 to me.
Yes.
He charges me VAT.
Yes.
So when I'm now selling one to Mr. Bamidele, what do I do?
You also charge me VAT.
So now the government is collecting VAT from 3 people.
Thank you very much. These are multi-chain, multi-levels of payment. But the multi-level of payment, you now pay not the same amount that you are. What is being remitted at every level of transaction, there is value that you are adding.
Yes.
Because you are going to the warehouse of the person who imported.
Yes.
You brought it there to your shop.
Yes.
You have added a little value to it.
Okay.
And that means that a margin has been added.
Okay.
And that margin that has been added is the one that the VAT is being charged. But it cannot actually be segregated. Therefore, the total value of that product is what you now charge me when you are now selling one to me. That, okay, perhaps what you have bought it totaling, after paid initially you bought it at 100, you pay 5% VAT on it. That's one. At the time it comes to you, now you have, with your margin and the value you have added, it becomes 145.
Good.
And it comes to you, you are now selling to me at that 145, charging me another 5% on 145. If you compute it, the margin at the end of the day that is coming on it will be about 7.5, thereabout on it. You now subtract the 5 that you had paid from it. What you are now paying to the revenue is 2.5.
Okay.
But since I'm the final consumer, I will be sovereign 7.5. But at each level, a deduction will be made. That is, you will be reducing what you have suffered will be, you won't suffer even any VAT at all because you have charged me the 5 on it. The 5 you pay to the importer.
I'm taking from you.
From me.
Okay.
The one that the importer had also charged.
You are taking from me.
From you.
The wholesaler.
Which means at the end of the day, it's me that
it is
consuming.
Mr. Bambe who is consuming.
Me that is
that will pay that 7.5.
5
so,
as the value, because the total value and every chain of value addition have been added for me to pay that about 7.5.
So Chinedu, the stockist, does not suffer
any
VAT.
VAT.
RT
The importer
Bonner does
not suffer, but it's me that is consuming it.
Okay. So that goes back to what Mr. Victor was talking about. It's an answer to him. The mechanism is even inbuilt
yes.
for the refund along the line.
Along the line.
Okay. That's collection. How do I file?
Now, in filing, at the point of you are computing your VAT, you've bought, say, 10. At the end of the month, all that you have sold out of the 10 is 5. What you now claim is that how much did I pay on these 5? Good. Not on 10. Because you are claiming input on 10 on the sales of 5, then you will be overclaiming.
Okay.
You will look at what is the cost and how much have I paid on these 5.
These 5 that I've sold in this month.
In this month. Then you now take the output VAT of it and remove what you have paid on that 5 from the output. And then the balance is what you remit. Then what is the time of filing? Which is likely to be the next question. The time of filing, the activity, like activity of preceding month. Take, for example, we're a month of May. Those activities that, we're a month of June now, those activities of month of May have to be reported in month of June. And the filing have to be done on or before the 21st day of the month of June.
Okay, for all the VAT collected in the previous month.
Yes.
Okay, okay. Where do I send that money to?
You don't pay cash to FRS. The bill of payment of cash to or check to FRS have been solved. We have so many platforms of payment of for taxes now. You can pay through your telephone, your handset. You can pay into the bank of your choice or giving directives to your bank to remit the money, and you can do a transfer, whichever way you want to do it. You pay into the account of Federal Inland Revenue Service. Okay. And the moment it is paid, then the payment is acknowledged and the receipt is generated for you.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
You were talking about the taxi driver, or I was speaking about Chinedu, the man selling printers and all that. But there's this other one where government or government agencies, ministries, departments and agencies deduct VAT at source.
Okay.
How does that work out?
For government agencies and oil and gas, it's not limited to government agencies.
Okay, oil and gas and government agencies.
Government agencies. That, yes, now you are the one who is, like I explained earlier on, who is going to pay this VAT. It's not the person who is rendering the service. It's not the person selling the goods. The final consumer is the one who is paying the VAT. Now, because of the collection of this VAT and because of those multiplicity of those people who render services, some are in the tax net, some are not in the tax net, that, okay, how do we do this, that we make the payment of VAT easier and be sure that those who are paying, the money actually got to where it should be. Then the law was put in place that government agencies, operators in oil and gas withhold and remit to the Federal Inland Revenue Service. In withholding, something that's generally what we refer to as a reverse charge. A reverse charge simply means that rather than you that is selling to charge me, it's me who is supposed to pay that we withhold and remit. That's what it simply refers to as reverse charge.
A construction company is awarded the contract of the second Niger bridge.
Okay. Yes.
For 100 billion.
Yes, or whatever amount.
Good. Now, who bears the brunt of VAT?
Government.
The federal government.
Yes.
You are now saying that instead of that construction company deducting the VAT,
rather than charging, and when he's raising his bill, he will include in his bill to federal government. It's not part of the cost, or it's not part of the contract that is put in, but it's charging federal government that, okay, I've done 100 units of money work for you.
Yes.
And you are to pay me this 100 units of money.
Yes.
But upon it, what you are to pay also is value added tax of 5%.
The government that is paying that VAT.
Now, it's government that is paying that VAT.
Okay.
Ordinarily, by ordinary working of VAT, government is supposed to pay it to the construction company, so that the construction company will in turn come to Federal Inland Revenue Service to come and pay. But based on that law that says government or oil companies withhold, the MDAs, ministry, department, and agencies will withhold and remit to Federal Inland Revenue Service. Okay. I know what might follow is now these are output VAT. What about the input VAT that have gone to this? How are these construction companies or such companies that are involved in these activities? How are they going to get their input VAT? Where it is service, it is clear that they don't have anything to claim as input VAT. But where it is construction, it is only on the materials that they now have VAT to input VAT. And in that one, the law provides that, okay, where we have such, then they have refund mechanism. Provide the evidence that actually these are the input VAT that you have suffered, and claim your input VAT by applying as provided for under Section 23 of Federal Inland Revenue Establishment Act. When you are applying, you must be sure that what you are claiming is right. And that law provides that whatever application that is being made for refund, such organizations have to be audited to confirm its claim. When you apply, then audit is put in process. And the moment the audit is completed and confirmed that such claims are genuine, then the refund is implemented and you are paid.
There's this confusion among taxpayers, company owners,
okay,
regarding withholding tax and value-added tax. We spoke about the second Niger bridge. We say, okay, 100 billion. And you say in invoicing government for the 100 billion, the company should add 5% as VAT,
yes,
which is borne by government.
Yes.
But when government is going to pay, it still goes ahead to take again what they call withholding tax And people talk about 2 deductions. Do you want to
Okay,
clarify
thank you.
issues?
Thank you very much. That one is clear.
Yeah.
In the sense that, when the contract is awarded for 100 units of money, one, government bears that burden of VAT. The other part is that withholding tax, I mentioned it some time ago that withholding tax is advance payment of tax.
Yes.
The person who is executing the contract is expected to pay tax at the end of the day. And for the payment of the tax, the law says, oh, when you are paying this man, withhold part of his money and pay over as a deposit for the tax that is going to be due from him. The thing that is happening that appears to be bringing confusion is that the withholding tax rate is 5% and the value added tax rate is 5%. It is often confused that, yes, you have taken 10% from my money. Why do you have to take 10% from my money? And that is where the area of clarity that we need to bring about. Number one, 10% is not to be taken away from the contractor's money, because it's not 10%. The 100 unit of money that is being charged by the company, the MDA, oil company that is paying, supposed to have paid 105.
Good.
The 5 on it is the VAT. What the companies should suffer is only 5%.
So
and
it becomes 95.
It is 95
Units
that
of
the
money.
company should be paid.
Okay.
And not 90 units of money.
But what,
5 have to be borne by the government or oil and gas, while 5 is borne by the company as withholding payment towards payment of his own taxes.
but what if in ignorance I don't add that VAT to it? The MDA will still go ahead and remove 10%.
No, would be wrong on the part of the MDA to even remove 5% on it. You are not expected to add the 10%, but you have to show it in your invoice that, yes, this is the 5% VAT that is due on this transaction, and my own value is 100. The 5 is what you to remit to revenue because you have consumed the service that I have rendered to you.
Yeah, okay, man. Yeah, waiting be this.
The deduction now for withholding tax.
Withholding guinea. Look, if una no pay me my correct money today, hey, munu get made you half for.
But madam, should be your company paying income tax.
Yes, that one na enough load for me to carry. Why una wan come add join am again?
You see, withholding tax now advance payment for income tax. So when you do some kind job like contract, we go remove small from am when we won't pay you.
And una go contract am up. No. Abeg tell me another.
No. We must pay the money to FIRS within 30 days, and they go give us withholding tax credit note to take show say you don't pay part of your income tax in advance.
So?
Now to help make the money where you go pay at the end of the year small.
So this withholding tax one thing, it be like part payment of no.
Exactly, madam.
I beg you, give me my check.
Remember, come collect your credit note.
Withholding tax now for we own good. FIRS, it pays to pay your tax.
Now, withholding tax, there's something like credit notes, which I use at the end of the financial year, at the end of the road. Is there a receipt for VAT?
We don't issue receipt when there is a reverse charge. The person who rendered the service is not the one that is paying. As such, there is nothing to issue to him, because by issuing it to him, is being treated as the one that is paying, whereas it's the consumer of the goods and service that is paying. But my input VAT, how do I claim it? That's where I said there's a refund mechanism in place. What you have suffered, and you don't have the ability to deduct it from the final payment that is going to be made to government, then you need to come forward with claim of that input VAT.
Another reason why I may need that evidence may even be also when I want to file. If I want to file
Now,
for VAT.
what you just need is to bring the evidence of the invoice that you have raised on that government that, okay, yes, I suffered this one, and this is the invoice that I charge this government, and it has been withheld. And by providing such information, it gives revenue two opportunities. One, to confirm that what you suffer had actually been paid to the service. Because sometimes there could have been deduction or withheld, but not rather to the revenue. But with that information, we'll be able to follow up with whichever organization that you have rendered such a service, which means you provided information. Two, it becomes a proof to you that, okay, yes, this is what I have done, and then on the basis of that, this is the input that went into it, pay me.
We want to thank you most sincerely, sir, for finding time to share your knowledge on this matter with us. We do hope that our viewers have gained one or two things, and that going forward, there will be more tax compliant. Thank you for coming out to the program.
Thank you very much.